Markets are on alert. We are currently live. We're going to be taking a look at the markets today. We had strong retail data hit right before the Fed decision tomorrow, keeping traders guessing on whether cuts will come out faster and more cautious. Alrighty, guys, welcome back to the Rob Report, where money meets news. Today, we're going to be breaking down core retail and retail sales and what they mean for the markets with the Fed decisions coming tomorrow. Again, tomorrow we're expecting Jerome Powell, the man, the myth, the legend himself, to cut rates 25 basis points. I'm going to share with you this screen here to show this is how the market is reacting this very morning here. We are on TradingView. We're on the 5-minute chart right now, and this is how the market's reacting. The first 5-minute candle, we have about a 17-point drop, nothing too crazy. But when the news initially dropped at 8:30 this morning, let me get the candle here. The market, this candle here, the market didn't react at all, and I think it's because of the anticipation of tomorrow's rate cuts. Overall, let's see what the results was on this. So taking a look at here, we see that core retails was previously at 4.0. It was at 4.7. It came out at 4.7, so hotter than expected. And then right here, we see retails at 0.6, forecasted at 0.2. It came out at 0.6. So hotter than expected. And right now, we're taking a look at the market. So what does this mean, right? What does it mean to, hold on, the market looks like it's dipping right now. Let me switch back to this tab here. All right, we're gonna go back onto the market to look like the market, oof, look at that candle right there. Look like the market is dipping. I appreciate you guys for tuning in live. I really rarely do this thing live at all. So, you know, wow, the market is really showing some negative feedback here. Looks like the market is not liking what it's seeing. Either way, guys, retail was forecasted at 0.2, but it actually came in strong at 0.6%. The market, so I'm like looking at the market and it's dipping so hard, it's amazing. Back to school, some of the drivers to this is back to school shopping. All right, so people are shopping more than expected because of back to school. So there's a surge in online shopping. All right, the caveat for this is that part of the gains come from higher prices. It doesn't come from just volume. All right, you've been out shopping, you can see that everything is more expensive. So it's not like people are going out buying more things. They're just spending more money on less things. Okay, so the market reaction for NASDAQ, well, it's dipping, all right? It's dipping. The dollar is weakening as well. And when we had core retail come out, we had core retail at 0.7. It came out better than expected, all right? And the market looks like it's recovering right here, right now, a little bit better than expected. So that's nice. The meaning for retail is that consumers are spending broadly, not just in isolated categories. Risks are unemployment. This means that unemployment may drag in the months to come. Yeah, very nice. Very nice. Let's see if we can pull out some news on what just on what just happened. Here we're gonna go core retail. All right, so let me share this tab here. So we are on Seeking Alpha. U.S. retail sales grew about 0.6 month over month to $732 billion in August, outpacing consensus maintaining the 0.6% increase in July. According to data released by the U.S. Census Bureau on Tuesday, the prior month's growth was revised from 0.5%. August retail sales climbed 5% year over year. Total sales from June 2025 through August 25 periods 4.5 from the same period a year ago. Excluding autos and gas, retail sales climbed to 0.7% month over month versus the 0.3 in prior months, revised from 0.2%. Some of the things that I mentioned that they're noting here is that non-store retails jumped 10.1% year over year, while food services and drinking places were up 6.5% from August 2024. The solid print indicates that it's too early to say that the economy is headed for a recession. Okay, that's very important that they stated that right here. The solid print, it's too early to say that the economy is headed for a recession, and I'm going to highlight that. So basically, if these news come out better than expected, we're going to have we might see Jerome Powell tomorrow say, hey, sales are coming in hotter than expected. Retail sales are coming hotter than expected. And he's like, I'm not lowering rates. That's why we're seeing such a heavy drop this morning in the market. That's why we're seeing this heavy drop in the market here. As soon as the market opened from 8:30 news came out hot. And the market did nothing. The pre-market did absolutely nothing because they're like, wow, this data is amazing. The data came out amazing. Why would Jerome Powell come out tomorrow and lower rates? So the market's reaction to that news, very good news, right? And this is the thing about trading and being on the market, is that good news for the economy doesn't mean that it's good news for the market, like NAS 100 right now. Tech companies did not like that, all right, because my dog is running rampant in my warehouse. So tech companies didn't like that at all, because even though the economy is spending more money, Jerome Powell can use that not to lower rates. And tech companies want rates to go lower because it's easier to borrow money. Tech companies want the rates to go lower because it's easier to borrow money. And then we're dipping right now. As I'm looking for a level here. I'm going to go into my 1 hour chart. Looking at the level here, this seems like, I'm going to put this line here. This is where I think the market's going to go dipping. This is where I think the market's going to go down to. If this here continues dropping, we're going to see the market go all the way down here. There's a good pricing that the market could go down to and grab pricing from here. And that's what I think the market is going to do. If the price doesn't hold up here, if price doesn't hold up here and around these areas here, then we're going to see price reject and come down all the way to this 24,150, 24,200 levels. And it's going to be a wild game tomorrow, because now let me look up what the odds of the Fed's rate cut is at this point. What are okay, let me see here. I'm going to go to the Fed's watch themselves. FOMC meeting. FOMC meeting. The next meeting is in 1 day, tomorrow. 1 day, 4 hours. I love that there's a countdown here, because it tells you exactly what you need to know regarding that. We have the Fed watch tool tomorrow. The probabilities for September 17th, 2025. So we are targeting a 96%, right here. That's what we're looking at right here. A 96% chance of the Fed's cutting rates tomorrow by 25 basis points. Right here, we're gonna go, is what we're looking at here as far as the cuts. Very, very, it's expected. It didn't even budge. At this point, it's like at this point, yeah, the data came out better than expected. Here, the data came out better than expected when we look at core retails and retail sales month over month. But it's like Trump says, it's too late to not cut rates, especially after we had so many revisions on jobs. From last month. Over 900,000 revisions of jobs from last month. All right. Going back to charts, let's see what's happening on the charts here. When I'm trading, I don't like having my charts too tight. I'm doing this to show you guys how the chart looks, right? But this right here is way too zoomed up for me. I usually play like this. My charts are usually 40 points. So I'm looking at like 24.20, 24.520 to 24.56. My charts look like this at a normal. This is the 5 minute. I don't like having my charts extremely wide like that. It makes traders impulsive. It makes traders impulsive when the charts are so zoomed up, right? Because anything seems like a crazy move. Look at this, man. That seems like a crazy move. That seems like a crazy move, and it's not that crazy. But just wanted to tap in this morning, guys, regarding what just happened with core retail. I'm going to be doing more live streaming like this, but I'm also going to be dropping the videos that I drop. I like live streaming. I just set this up. I went through a few tests with the live stream a couple days ago with the Charlie Kirk memorial. I began live streaming, but I had complications setting that up, right? I was trying to live stream off my phone. It went vertical. I was trying to live stream again. I told me to turn the phone on the side. It still went vertical, so I had a hard time going live stream with it. But I had to get my DSL camera shooting from here, and then I had to get another monitor, put it on top of my screen, so I can be able to do this for you guys. So I do like this setup because it allows me to be more raw with you guys. You guys are able to interact with me live. So if you are tuning in live with me, you're able to ask questions. You guys are, and look at this shit. Watch. Like I'm able to put this on the screen here. How cool is that, right? So I'm able to like do stuff like that. If you want, I could do like, and thank you guys for watching and doing a vlog, so that's awesome. And I'm able to like do noises and stuff like heart rate, the market's dropping, and show like a heartbeat. It's pretty cool, man. I'm using a StreamYard for the live streaming that's going on right now. And I also like the feature that I put music on, so in case I want to like put a little music in the background so you can enjoy me talking. That's pretty cool. But before I go, I do want to dive into one last thing, and what I want to dive in is the Fed rate cuts tomorrow, what you could expect tomorrow with the Fed cuts. So let me look up some information before I share the screen. The Fed. And the market still looks like it's dipping. Here, I'm gonna kind of show you. Oh, right, it still look like it's dipping. On the daily here, the daily, a beast of a chart. Wow, look at this shit. Sorry, I don't want to be cursing like that. Usually when I do my videos, I take out the cursing when I'm live. But look at this daily chart. Wow. The daily chart is absolutely going bonkers. Absolutely. Wow. What a crazy chart. And it keeps going up and up and up. This is why so many people are talking about, like, oh my God, what's happening with the market? We're at all-time highs. We're at a bubble. We're in the AI bubble. Everybody's expecting this AI bubble to pop, but we keep building. It's incredible. Looking at a chart like this, it's like not a, like, yeah, we have pullbacks here, but this doesn't look like a pullback is happening. It doesn't look like a pullback is happening. But whatever, like I said earlier, the news doesn't take, the market doesn't take the news the way that we as people take the news. Like, the news came out, core retails came out incredible this morning, and the market's tanking on that incredible news because the market doesn't have the same perception as we do as humans. But let's wrap this up. I know the video is getting about 20 minutes long, me kind of touching on everything. Regarding the basis points tomorrow, I already put the level that we're going to be in. I drew it down here. All right. So the consensus for tomorrow is that we're expecting a 25 basis point cut from 0% to 4.25%. All right. So we're going to cut from, that's going to be our range, 4.0% to 4.25%. That's the target. And it's widely expected. The pricing via the Fed's funds futures implies a very high probability. Okay, the market look like it's holding up right here. What matters the most is that the SEP dot plot path and Powell's guidance. Markets are going to brace for at least one more cut later in 2025, but could balk if the dot implies fewer total cuts than the current price. We have to watch out for splits between members favoring the 75 to 75, the 50 to 75 basis points this year. Okay. And that's basically what we're going to be expecting. We're expecting a 25 basis points, a 50 to 75% more basis point at the end of this year. We're going to get another rate cut. But the equities and durations have leaned dovish. So that's also a reason why we're going to keep a standard 25 basis points, because we're cautious and we're most likely to beat expectations. Conversely, a surprise 50-point basis cut, which has a low probability, is still on the table, but has a high probability of not occurring. So with that being said, if Powell cuts rates by 25 basis points tomorrow, markets are going to go up. Markets like the NASDAQ, the S&Ps, they're going to go up. If Powell cuts basis point by 50 points, markets are going to have it's going to be a rocket. I'm going to go live tomorrow for that specific reason. So with that being said, I'm going to be updating you tomorrow on that market guidance. So thank you for watching the Rob Reports, guys, where money meets news. Make sure you like, comment, and subscribe. Oh, before you leave, and again, I'm new to this. I should have done this earlier. Look. Make sure you comment right there, guys. Make sure you like, comment, and subscribe. I got the banner running along the bottom so you guys don't forget if you are already on it. And I'm out of here.